Despite the rally in stocks, a number of individual investors have decided not to join the bull run. They're simply fed up. Here to talk about what will bring them back to the stock market is Elliot Weissbluth from HighTower. Welcome, Elliot.
Thanks, Craig. Thanks for having me.
All right, it's been 5 years since the financial crisis. Still, you have a lot of people, despite the rally in stocks, sitting it out. What will it take to bring them back?
I think the key characteristic is going to be a renewed trust in the financial advisors that are giving advice to people about whether they should be buying or selling securities, the types of securities, and the products that they should be investing in. And I think we're beginning to see that confidence get restored, but we still have a ways to go.
Certainly there's been a big shift within the brokerage industry. A lot of chairs being moved all around. You see Morgan Stanley growing, other places getting smaller. What does HighTower do differently?
We fundamentally have a different business model that's focused on the client's interest as articulated by a fiduciary duty, and we've structured out the economic conflicts of interest that has plagued the traditional firms because they make money several ways at the expense of the client, where we make money only one way, and that's by providing services to our clients.
So you're not getting paid per trade? Is it you're getting paid by assets under management? How do your employees get paid?
Well, our financial advisors get paid as fiduciary service providers. And as you point out, in the traditional firms, there are multiple layers of fees because they're paid as the manufacturer of the product and as the sales and servicing component of the product. So they get paid twice.
And how are they counseling their clients right now? We've gone from tech bubble to housing bubble. Now people are talking about a bond bubble. What are they hearing and how are they calming their clients right now?
Well, I think that we're at the beginning of a bull market period. Confidence is coming back to the marketplace, but the key is for financial advisors to understand where those opportunities are so they can invest their clients' money, not because of any influence that may be because the firm is encouraging them to sell a particular product, but because they think that's really in the best interest of their client.
What about the safeguards post-Madoff scandal? That was another thing which drove a lot of people out of the market. They say, I'm just not going to trust any financial advisor. I'm going to put it under the mattress. I'm going to buy gold. I am done with Wall Street. What about the safeguards when it comes to their security?
Well, we work with the largest and some of the safest third-party custodians in the industry. These are firms like Fidelity, like Schwab, like JP Morgan. Having a Madoff situation means that you don't put your assets and don't safeguard them with a third-party custodian. A Madoff-type investment would never have occurred at HighTower because we require all the assets to be held at a third-party custodian.
And as I mentioned, there's still a lot of distrust in America with regard to Wall Street. So do you find this more among the older generation or the younger generation?
Well, it's a great question. I think there's a growing sense of distrust in the boomer generation, but I think that distrust is blossoming in the millennials. If you take a look at some of the statistics, as high as 90% of the millennial investors will fire their parents' traditional Wall Street broker. If you take a look at the statistics of how many millennials will second guess the source of an expert, it's almost 4 times as high as the boomer generation that's likely to just take the advice of their financial advisor.
Thanks a lot, Elliot.
My pleasure. Thank you.
And thank you for watching The Street.